more on Hong Kong, it's time to talk to our guest host, Peter Churchouse, Head of Research at Morgan Stanley Dean Witter. He joins us from our studios in Hong Kong. Peter, big picture first of all, we talked on Squawk Box maybe about 2 months back, and you had called for, I believe, 16,500 on the Hang Seng first quarter of 2000. Do you still hold that view?
That's correct. We're still pretty optimistic that the first quarter next year will see a significant rally in the Asian markets as we come into the new year, as we see asset allocators moving back into the Asian markets who have been pretty much absent from these markets for the last 18 months or so. We don't think that's an unrealistic target, somewhere in the 16,000 range. And in fact, if you think about it, we're only about 25% away from that right now. So yes, we're still sticking to that target. Hopefully we'll get there.
Right, Peter, Rico, he's on here also in Singapore. Basically, two stocks propelled the Hang Seng Index today. You have HSBC Holdings and China Telecom. So could we also see a 25% rise for these two stocks when it reaches 16,500 by the first quarter of next year?
Well, I think you might see some of the other stocks performing a little better in the New Year rally for the simple reason that the Hong Kong Bank and telecom stocks have done very well this year already. Hong Kong Bank clearly has been benefiting from easier inflation numbers in the US, and we think also is going to benefit from the general recovery that we're seeing in the Asian markets and the Asian economies. Bank stocks typically do tend to be seen as proxies on economic growth and economic recovery. So we think the bank shares are going to be very good. As far as telecom is concerned, clearly the China Telecom issue went down extremely well. Telecom stocks, anything to do with media, internet, right now are hot properties in this part of the world. And so I expect we'll see, again, good performance out of the telecom sector generally in this region.
Peter, if you could talk to us a little bit about the government's tracker fund in Hong Kong. Originally, investors were a bit skeptical and they sold the market short because they were worried about this tracker fund dragging the market down. The pricing is due on November 9th. How do you think this fund will perform?
Well, I think it's going to be much better received, in fact, than a lot of people were thinking. We are seeing a lot of retail interest here in Hong Kong at the moment. I think partly driven by the fact that it's going to come at least a 5% discount to the market. Secondly, retail investors in Hong Kong will get bonus shares, loyalty shares in this fund if they hold the fund for 1 or 2 years. That, I think, is being seen as very positive. In fact, that's probably worth about 16 or maybe 18% to the fund. So I think it will be well received, not so much by the institutions, but certainly by the retail investor base here in Hong Kong.
Peter Churchouse, thank you very much indeed.